Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Thursday, December 11th. I expected the NASDAQ market to give us follow through to the upside, but that is not what happened. Concerns about China and Greece still remain dominant in the news, and we can see the bearish action that we're seeing here from that. However, the issue is, do we expect follow through? I do not. I think the market's absorbed. Unless we get new news, I'm looking for a sideways move here. But when it comes to those currencies, the euro did get stronger. The Swissy got stronger. I was looking for the dollar to remain dominant, and that is not what happened here. The dollar got weaker against these currencies. Also, I've been asked about this change here, this difference between the bearish and bullish level in Japanese yen and a few other things. I'll just give you a quickie overview. Again, your computer program for your broker will do these calculations for you automatically. But the difference between this bearish level and the bullish level is 945 ticks. A tick is the smallest amount of movement you can have in a futures contract. In this case, for a currency, it's 0.0001. Alright, so that happened, that change, but there was 945 of those. Each one of those is worth $12.50. So that's where you take $12.50 times 945 and you come up with $11,812.50 per contract. That's where that number comes from. In the Aussie dollar, we traded above this bullish level. The difference between the bearish and bullish is 50 ticks. In this particular contract, each tick is $10. So that would be a $500 market change. Now, there's also the microcurrencies, which have 1/10 the value of these full-size contracts. So same calculations, it's just 1/10 smaller. So instead of $500 per contract, it would be $50 per contract. Now, let's move on and let's take a look at the interest rate markets. As you can see here, the 10-year notes continue up as that uncertainty pervades the market. This is logical behavior. I don't think it's sustainable though, and I'm looking forward to the market to give us a rest today. If you look at gold, also I was looking for a rest day for gold. It gave us that. Again, I think that's logical. Same thing for copper. We look for a rest day there as well. Now, the difference between the bearish and the bullish level in this market is 3.5 cents. Now, this trades in 0.0005 cent increments. Each one of those changes is $12.50. Another way to say it is that each full penny, to go from 284 to 285, one full cent change is $250. So this magnitude of change here in this particular market was $875 between this bullish level and this bearish level, to give you an idea of how that fits together. Alrighty, let's talk about not metals, but let's talk about energy. You can see this market moved lower. Yesterday we were talking about that $62 level. I think this also makes sense, and I'm looking for further weakness in that market. When it comes to the grains, soybeans also traded below its bearish level. The difference between the bearish level and the bullish level in this market is 28 cents. Now, this market trades in quarter-cent increments. Each quarter of a cent is $12.50. So this and each penny is $50. So this magnitude of change here is $1,400, is the magnitude of change between this bearish level and this bullish level. And there's also a mini contract for the grains, and that's 1/5 the size of the full-size contract. Looking for a rest day in this market, unchanged to lower in the soybean market. Well, that concludes today's market studies. Thank you for being with me. Look forward to being with you again, and as always, take care.